right, so 2025 presents both challenges and opportunities for the Nigerian economy. It's time to examine the key economic indicators, including inflation, interest rates, and exchange rates to assess the overall economic health of the nation. It's the month of outlook, as I said before. Let's hear now from CardinalStone what to expect. Joining us for this conversation, we have Baboye Olaolu, who is a lead economist at CardinalStone, joining me right here in the studio. Good to have you. Happy New Year.
Yeah, same to you, and thank you for having me.
It's been a while.
Yeah,
had you on the show, and finally we're doing it in person after a long time.
I'm excited to be here.
How's 2025 looking already for you?
Well, it's great. It's the time to relax, to get back to work. So basically, the first few days has been a time of relaxation.
Still laid back, a little bit.
Kind of.
All right. So looking at 2024, there was the same old headwinds from inflation and NPR. We see the central bank over 850 basis point hike.
That's correct.
Trying to tame inflation. And I see some data you put there. If you're looking at the flow of inflation and NPR, if you can put that up for me, you see the way inflation, we've seen inflation on the rise, NPR also, matching that. There you have it. And you already have expectations for December 2024, but it's looking like it's somewhat stable. That's inflation. What's the data telling you?
Okay, so there will be slight increase in December 2024, right? It's festive induced activity, a lot of buying things for Christmas. So the expectation is that inflation will close the year, that's 2024, at around 35%. Right, but
35%.
Around 35%, certainly, right. But coming into 2025, we think that the dynamics will change. We think that inflation, on an average, will moderate modestly. So we're looking at an average of 29%, 30% on an average for 2025, compared to 33% average that we're expecting for 2024. Right? Why the moderation? Not because the dynamics has materially changed, just that some of the pressure point that we had in 2024 are somewhat reducing. For example, exchange rates, which devalued by about 40% in the course of 2024, is likely to be more stable, right, in the course of the year because of the effort of the CBN, the improved flows that we're seeing, foreign investment excitement is likely to keep the naira modestly. We're going to see modest devaluation compared to what we've seen in the last 2 years. That should have a positive pass-through to inflation. Secondly, PMS prices are likely to be much more stable, or energy prices generally are likely to be much more stable, right? I heard the last speaker before I came up, he was talking about, PMS prices. I think that if we have Trump come on board, that forces oil price down, and we begin to see FX stability, then you should expect a pass-through to PMS prices, right? PMS prices are currently being sold less than 1,000 naira in Lagos, compared to the over 1,000 that we had some months back, right? We don't expect a massive appreciation. We expect more stability. Now, that stability is comforting for transport inflation. We pass through to food and with core inflation, right? And then base effects. So the combination of these three factors are likely to keep inflation slightly lower compared to this year. But post-2025, when you go to 2026, 2027, we might begin to see inflation come down to about 20% levels, right, which is a level that the CBN appears to be fine with as of the last communication.
Right, and we see optimism around the naira starting the year quite stable and strong. Following from 2024, we've seen the NFM and parallel market. They have converged. They converged in 2024, and they've been moving along the same line towards the end. So is this the year the naira strengthens, 2025? Okay,
so the argument for naira stability has never...
We shouldn't talk about strengthening, we should just talk about stability.
Yes, that's the focus.
All right.
Stability and reduced pressure. Right, the conversation around naira stability has never been that strong, right? For a few reasons. Number one, we are seeing a lot of foreign investors becoming excited about the country. I was having a conversation this morning with my firm, and I made them to realize that historically, this is the best time, or this is the time that foreign investors are so confident in the central bank compared to historical disposition, right? They love the policy that the CBN is doing, they love the communication, they love the clarity. So clearly, it's bringing a lot of encouragement to them. And we're seeing a lot of foreign flows. And you recall, before Cardozo came in, we had backlogs. About $7 billion exited this economy last year. They felt they wanted to leave. It's fine. There was easy repatriation of funds, no restrictions. It's been long we heard of that. And then we also had a lot of reinvestment, which means investors are confident in the economy. Secondly, on what is driving naira stability, or what should drive naira stability, is the recent electronic FX window that the CBN created. It gives a feel of what happened in 2017. In 2017, when the I&E window was created, what we saw was that naira appreciated both at the parallel market and at the official window from 390 to 360, and was stable at 360 between 2017 April, May, till few months before COVID. Right, this is giving a feel of that again, that we might begin to see foreign investors becoming more confident, because the system that was created has brought clarity to the FX transaction. It has reduced the magnitude of speculations that we're seeing. So clearly, it's going to be a good one to look for. The only thing is that the window or the system is yet to be tested. When we begin to see pressure from regular demand pressure, if the system is able to withstand that, then this is comforting. Then we have other factors like the fact that Nigeria has greater access to dollars, be it from dollar domestic bond, be it from euro bonds. We had book order of $9 billion. That's exciting, right? We have reserve that is growing. All these factors gives a feel that the conversation for naira stability cannot be this strong, right? It's super strong compared to.
I guess we're riding on confidence at this point. All right, let's look at FPI and FDI now. So hot money is getting hotter. That's looking at foreign portfolio investment. We're seeing for November 2024 that outpaced FDIs by a whole lot. So talk to me about the advantages of FPIs outweighing FDI, even though we would prefer FDI. At this point.
We do. Okay, so it's good to provide a bit of context here. First, the actions of the monetary authorities will always influence that of the FPIs, the hot money. The actions or the combined action of the monetary authority and the fiscal authority will influence what you will see from FDIs. Now, the FPIs, like I said, are gaining more confidence in what the CBN is doing. And we've rightly mentioned in the past, the fiscal authority will like the fact that they are coming with a lot of reforms. Now, these reforms, they typically take a significant period of time, mostly medium term to long term, before the benefits fully crystallizes. So you might see a 5-year period, you might see a 6-year period or more. Take, for example, in early 2000, there was telecommunication reforms and other reforms that the government put in place. The benefits came some years after. Now, it is those reform benefits that will inspire what the FDIs will do. For now, the benefits are still not yet to be fully, they are yet to fully crystallize. Hence, FDIs are still not sure what's going on. So for now, they will most likely be on the sideline, observing things and seeing how things will go. But if you see these reforms, from the fiscal reforms, from the FX reforms, from the overall economic reform, if we see progressive or stay in the course on that reform, then they will be encouraged to come.
So at some point, what do you think we should be doing now, short-term moves, to allow FDI, that's foreign direct investment, somewhat outpace or maybe have a level playing ground with the FPI?
So for now, we should not be bothered about bringing them at par. FPI should most likely continue to outpace at the moment. What we need to do is stay the course, continue with the reforms, stay it. It might not be comfortable now, but it's short-term pains for long-term benefits. So stay the course, and certainly they will come back.
All right, let's look at the stock market now. What are you seeing for 2025? Was a great performance
exactly
in 2024. Does that continue, or do you see short-term pullbacks for the all-share index? That's for stock market.
So we really think that the stock market is biased to the upside. We're looking at a return of 40% for 2025, right? We think that, number one, from a macro perspective, the sector that we think will benefit the most or will outpace the most this year will be the oil and gas space, right? So we expect that pass-through to affect both the upstream players, the downstream players, the likes of Aradel, the likes of Total, the likes of Seplat. Secondly, we like stocks with corporate actions. Presco, they have an acquisition that they did in Ghana. It's yet to be consolidated on their books. Seplat's acquisition was recently completed. You begin to see the benefits this year. We also like stocks that are currently deleveraging. The likes of WAPCO, they've deleveraged. The likes of MTN, renegotiating their TOA contracts. The likes of Airtel. Airtel is reducing its OldCo as, paid off its OldCo debt. They are reducing their OpCo debt, right? We also like dividend-paying stocks, the likes of banks, solid dividends. So we think that all this will drive a lot of positive sentiment in the equities market.
All right, we'll keep watching and see maybe if we see some kind of outperformance at some point. But thank you so much for giving us, I'm sure you guys had to look into your crystal balls really well to give us this outlook. That was Baboye Olaolu, lead economist, CardinalStone. Great having your perspective today.
Thank you so much for having me. Yeah.
All right, so there you have it. Those are the expectations. This should help you, somehow see how you can balance your portfolio so you can profit and have a better year than 2024 in 2025. Remember, you get all of that information right here on our business shows on Channels Television. That's it from me on Business Morning. I'm Ladi Williams. I hand things over to the Sunrise Daily team.